Alright guys, welcome back to the channel and a special hello to you guys that made it here before those cancerous bots. Today let's look at the time frames for the Bitcoin bull market cycle, the short term, medium term, and potentially one of the hopium targets to the upside here. Now I've also got the altcoins. We've had some developments here on Sui getting hacked in the last 24 hours, or a DEX on Sui. Ethereum, total crypto market caps, and the traditional markets, as at least from what I've seen in the last 24 hours, there is a lot of talk about bonds. So I think there might be a change in tune here soon, or a change in trend for the at least medium term. Hit the like, subscribe to the channel if you are new here. Thanks again for joining us. If you're returning, let's dive in. BTC, this is a monthly chart looking at the resistance over the last 7.5 years, connecting the all-time highs and, well, previous all-time highs as well, as we can see from April 2021 and now the distant all-time highs of 2024 and 2025, so December and January. So I've got this one here on the chart because on the video here, because it lines up very well with the USDT dominance, another chart that we've been tracking for the bull market. Once we see the dominance go up, essentially you see cryptos and Bitcoin go down. If the USDT dominance breaks key levels, then the overall crypto market generally sees an influx of new money, or easy money, to see those altcoins pump. However, like we've seen over the last couple of weeks, it's been grinding between a rock and a hard place. The all-time support line that I'm calling it here, which lines up with this chart with the all-time highs for BTC, has come into question yet again, as that line over the long term has basically been the end of the Bitcoin and cryptocurrency bull market. So we're right around that critical point at the moment. In the last day, we did see the price break down again. So we've seen 2 days now, 2 closes underneath that critical, I'm calling it a critical support line. If it wasn't critical, it wouldn't be there. To me, it's critical because, as I've said, it's basically been holding up the market. The only time that we've seen it break past that level was around the high of December 2024 and January 2025. So it was attempting to take out 3.7%. The good news to this is, we're looking at a time aspect here, time running out, is that at least we've seen lower highs on the longer term basis, 6.7 down to 6.2, and now we're getting a breakdown again. So it's back within the questionable zone between 3.7 and 4.5. Ideally, moves below 3.7 is going to send things wild. At least that's my view of the overall market. Otherwise, until that point, within this zone here, it might just be a reshuffling of strong and weak altcoins. And so then you're going to have to pick out which ones are going to be your strong altcoins for your portfolio that are potentially going to see the limited money that is released, or the limited stable coins that are released because it's in this zone, go into those altcoins that are going to pump, and other altcoins might just move a little bit. The majority of this is probably going to be taken by Bitcoin at this stage, maybe a couple of the larger alts. For the short-term analysis, we're just watching the next resistance level. We've hit both of the targets so far. The 50% held the market up here at 105,000 for about 8 or 9 days before it broke out. Then we watched the all-time high and the $111,000 level. So that was the 75% of the range. Naturally, we then go to the 100% of the range. So 117,000 there. You can see 116, 900, 117 for a nice round number. We've seen 3 highest daily closes in a row now. Trends are up. The market hasn't dropped off here at all and hasn't shown any signs yet in the short term. Volume has increased a little here as we broke out 2 days ago. Yesterday it started to drop off, but it was still a relatively strong close. So it's hard to even imagine that we would see some sort of correction soon. And I'm not calling for a correction soon whatsoever, but I do just want to have a look at any of those support levels that could remain strong or at least neutral for the market. My 2 zones, naturally, you'd be back around this period here, the mid 90,000s, which is also the diagonal that was the previous all-time highs back in 2021. So that's these 2 lines here. It held Bitcoin up before it crashed. So I think it's been respecting that support line quite well. It had it as resistance and then came back and had it as support. So naturally, if we were to see any sort of corrections back to that range, it's still in a neutral position for me. Underneath that line, that's where things start to get a little bit weaker. It's not the end of the world. It could just mean that we need more time to consolidate before testing higher prices. But that's a long way off. That's back to your neutral and weak zone. The strong areas I would look for are any corrections back to this zone here of around 102 up to about 106. And if it did pop off and then came back to here, it's still looking relatively good. Now, I talked about in the intro about this timing aspect here, looking out towards July, August as the earliest stages. This is just looking at the swings in a bull market, the upswings in a bull market. All that means is how many times do we see Bitcoin run up before we get corrections? And from previous cycles, it's been around 5 or so. 1, 2, 3, 4, 5. In this cycle, we've seen an extra one, but we did get a little bit of a choppy mess back at the accumulation of early 2023. And now we're seeing some cleaner runs go on. Cycles before that was similar sort of thing. So that's what I'm looking out for now. We're basically at the end of the upswings in the move. To me, that just looks like, where is that momentum coming from? And there's only so many times that you can get momentum from the market to push it on before people get worn out of the backwards and the forwards, the volatility. That's pretty much what makes people leave a market. They can't handle the volatility. So we're basically at those final stages now. Months in a bull market, 35, roughly speaking. That's what we've seen in the previous cycles. And I think if I got this post here from Michael, he's also looking at the time frames. We're getting very close to that same time frame again. If you remember back to March of 2024, so many people thought that this market was not going to go on. They thought it was going to be a left translated cycle and that it was going to be all over. For me, you may have recalled that's what we were looking for. We were looking for this market to keep going on through to the right translated cycle. I think I've got it on this chart here, this grand final boss chart. And we always looked at this because of the 18-year cycle. There was still further to go in the cycle. Therefore, we anticipated further upside for BTC. It doesn't mean you can't take some profits along the way. It just means that it's probably unlikely to end that early, all the way back in March. Now we're well and truly into the right translated cycle, passing out of the left translated cycle here, which means we're getting very close towards the end. And that takes me back to my point about the months left here. So 35, we're at month 30 right now. This is anchored to the low, and we are at month 30. So I've got it here at around 35. Of course, it doesn't have to end at 35. It could be 36 or 37 like we've seen in the past. Now, the other point I've got here, we've never the longest into the peak. So we've never seen the longest swing of consecutive months into the final peak. So this is the cycle, low to high. This is the other cycle, 2017, low to high. Then you've got your 2013 cycle, low to high. And what that looks like is this final peak. The months in that swing, 2013, you had basically 1.5 months running up because this one here went down and then took out the low and the high of the previous month because September 13 was quite small. Point being is that the charge to the top was relatively quick, or quicker relative to the previous swings up to the top. Now, I'm only interested in this case with where the months position themselves. Were they higher lows and higher highs? Yes, that's what we got in 2013. Again, that's what the swing is about here. That was 9 months, then 6 months, then 2 and 1. So it's getting faster and faster and faster. So you're getting that trajectory going quicker and quicker into the peak. Does it have to happen all the time? Not necessarily, but for the history of Bitcoin so far, that's generally what we have seen. We got 10 months, 7 months, 3 and 5. So it was not the longest move into the top. We had 6, 2, 5, 7, and then 5. So again, it was not the longest. That's all I'm looking out for here. And now we find ourselves basically 1.5 months up from that low, because we got another outside month, a lower low and a higher high. That saved us from the 3-bar rule, if you guys remember that as well. And what we've seen is a 3-month, a 6-month, and a 4-month. So if this is to break the rule and it becomes the longest into the peak, that means we would have to go 7 months. So where would 7 months take us from this low? 7 months takes us out to November 2025. Now I take a little move back in my seat, because that doesn't seem too far off. It's really from May to November. It's only 6 months, and basically May is almost finished. So call it 5 months from this point. 5 into 35 is 14%. Say the cycle goes on to 37 months. 5 into 37 is now 13%. So you're under 15%. That's just going with the history here. So yes, to me, that is time is running out, because we've already seen 30 months of the bull market. But there is still opportunity out there, of course. You just need to be a little bit more experienced, or have some sort of plan to not get yourself wrecked. Look at where those stops are at. And if you think I'm going to talk to you about TIA Premium, you're absolutely right. We'll have a sale on TIA Premium very soon. Link is in the video description. Sign up to the email now and you'll be notified when that sale goes live. Now, looking to the upside for the price targets, the monthly swing that I'm tracking, or that we're tracking here on the channel, is this range here, August to January, from the low in April. And we've just passed through the 50%. We've got 9 days left. Need a close above 104 to put this into the strong part of the extension, which then increases the chances that we go to the 100% level. So this is $134,000 here that you can see on the side. So I'm looking towards that as sometime in the next sort of 6 or so months. That's the target at the moment. Everything in trading and investing, unfortunately for the newbies, is a moving target. If you're been around the game for a while, you understand that that's how the game works. Everything is a flippin' moving target, and you've got to be on it. If you want guarantees, then banks are as close as you can get to it, and go get your 4% interest in a bank. Apart from that, you're playing the risk-reward game at the moment. So price targets, time targets, short-term targets looked at. We looked at USDT and how this is starting to come down, but it's still within the zone between 3.7 and 4.5. Ideally, we see this come down relatively quickly, or when it does get to 3.7, the breakdown occurs, and that's when things get a little bit more crazy. Timeframes here on the weekly, on the overall Bitcoin cycle are getting closer to that end stage. We're at the 900-day point now. Previous cycles 1100, 1100, 1140, so that could take you out to even early 2026. And how that could occur is that we see a couple of months up, pull back, and then another couple of, well, the remainder into that final peak. So I'll just draw that on the chart, maybe see another couple like this, a pullback and a pause, and then run it into that final move in, December, January time period as well. So I thought I'd spend a little bit longer on explaining the old time is running out scenario. I'll keep coming back to it, because at the end of the day, that's what the cycle is about. Time eventually runs out and the cycle is over. What we hear every single peak is that people think that time is not important, and they'll say this time is different because there's Trump there, because there's MicroStrategy there buying up, because there's something else that is going on, and that will inevitably lead the new people to think that it can't possibly go down. That's what happened in 2021. It's what happened in 2017. It's what happens happened in 2013. It happens every single time. So don't let yourself get fooled to think that this time will be different, and that a cycle can never go down, and that there's so much further to go. Rant out of the way. This is the first time now in 4 months that we've seen the crypto fear and greed index hit 78, or basically extreme greed. We had to go all the way back to January to get that highest peak there. There you are at 22nd of January at 84. Potentially even this day in 31st, doesn't matter. We're basically hit the extreme greed now. And in these extreme greed times, it doesn't necessarily last that long. And in particular, this cycle has not lasted that long in the extreme greed. Sometimes a day it holds out in greed again and then pushes higher again for a few weeks and then drops off. So if we are starting the counter from here, then we got to really be on the watch for any of these sort of tops to form. Local tops, let me repeat that, local top. We don't know if it's going to be the final top until well and truly after the fact. But for those all-time highs and local tops, that period, lasts something like a month or 1 to 2 months. So if this is the case, let's see how things progress over this period now, June into July. Now, I have more on this and any sort of corrections when I cover the traditional markets, as we've seen a little bit of a pullback there. But let's go through the rest of the crypto data here, and the Google search terms, search trends, the words crypto, Bitcoin. Bitcoin had its peak yesterday so far. Today's data is not complete, therefore, well, we have to see what happens tomorrow. Maybe we do get an even higher price and a higher search volume. Crypto has also just cooled off, had a couple of days up there, but Bitcoin has really been the star of the show, coming up to peak with the low of the market so far. The next piece is looking at Michael's analytics here on YouTube. He's just seen a 290% increase in YouTube subscribers on my most recent video. The point of this is we're starting to see more people come back. And it's not to hate on new people or returning subscribers or anything like that. I think you guys should know about the statistics when it comes to YouTube. I'm fortunate in a position where I can get to see that those analytics, and towards the highs, or when we get areas of interest that retail get interested in, obviously we see an influx of people on YouTube hitting the subscribe button, watching, the views are going up, that sort of thing. And it typically happens around the peaks. My channel's been up now for at least crypto since 2020. And I saw that in the first peak, and you saw it in the second peak, but not as big as the first peak. And again, we saw it in March 2024. Starting to see that now. It's just more people coming to the space. And when you look at a time count from there, you're in those final stages, potentially that final quarter of the bull market, as I showed you with that timing. So I don't want to rain on anyone's parade at this point. I just want you to be aware of history and hopefully make better decisions moving into this next, I would say, final stage. Even if it is 6 months or so, there's been 2.5 years of a bull market already. Okay, so let's change tunes and have a look at the US and how these peaks occur. We are seeing the debt ceiling increase here. Therefore, maybe we see a little more money flow out into Bitcoin, and we see this nice big blow-off move to 500,000. The point of this is the US government's authority to borrow, known as a debt limit, will increase by 4 trillion. They're at 36 now. 4 trillion is like a bit over 10%. This is a government that said they were going to cut all of this spending. There it is, 4 trillion increased. The US Treasury Secretary Scott Bessent predicted the government would hit the limit by August. So let's keep some of those timeframes in mind, at which point it could default on its debt. I'm not so concerned about that at this stage because we haven't seen a peak in the real estate cycle yet, but it's coming. And what we've seen with the US federal deficits, take it for what you will. This always gets into a bit of a debate with your lefts and your rights and your blues and your reds. Basically, the deficit has been getting bigger every time. You can extract that data how you will when you look at the reds and the blues in the background. At the end of the day, they're all giving us further and further debt. And that debt is leading to uncertainty and lack of confidence in the bonds at this stage. And as I said in the intro, something that's happened in the last couple of days is that there's been a lot of talk about bonds. So I think it's going to be interesting over the next few days to see whether we do start to get more closes at slightly higher prices and start to turn this trend up. And maybe the whole bond scare is put on pause for a little bit here, because so many people, at least from what I've seen, have been talking about it. Bonds are dropping off. There was a bad auction yesterday that could be calling the low. The yields had peaked yesterday and then have now gone down. That was the 10-year. The 30 years also hit 5.15 and now it's dropped off to 5%. So we're starting to see those yields just drop off, at least for this one day here, after we saw a pretty bad auction result for the bonds and a lack of, say, interest from people, authorities, companies, whatever, wanting to buy those bonds. So that's where we sit now for the US. that could all lead to things later in the cycle that could peak. For the S&P 500, it's also had a couple of days down here. So this has been the largest correction since mid-April. And the only other major correction was through the early part of May. But this was the time period here that we're watching for a bit of a churn here with the price. Basically, not really going anywhere fast. And that's lined up so far with the 5-year cycle that we're watching here. For the 20-year cycle, we've also got a couple of key points that we're watching through the end of June, August, and then into October as well. So it seems to be lining up relatively well with this cycle at the moment. This is our 20-year cycle on the Dow Jones, which is very similar to the S&P. And the reason I bring this up for, most people are here for Bitcoin and crypto, is I think if we do see a more significant correction for the stock market, and maybe it drags out for a little bit longer, that might be enough to at least pause the upward move here. We've all been going up together. Bitcoin's stronger than the S&P 500, but everything's basically been in step lock all the way up. Quick reminder that we've got a sale coming up for TIA Premium. Use this link in the video description and you'll be ready to go once that sale is live. And for you Aussies that are looking to get into the market, stay safe out there. There's $20 of free Bitcoin there if you use that link to get onto SwiftX. Okay, so talking about cryptos, let's get on to total market caps. This one here is the total 3, excluding Bitcoin and ETH. Starting to get a nice strong close here for the end of the week coming up. 910 billion is the number that you should be watching for a renewed effort in the altcoin space to find some strength here. It has been lagging the total market cap, which broke out of the 50% 2 weeks ago. So that's a sign of strength. And of course, it continued on with that strength, Bitcoin being the leader here. It's also pushed higher than the 50% extension, which would then have us on a good trajectory to go somewhere towards that $4.3 trillion, probably over the coming weeks. I don't think this is going to happen this week or next week. Of course, we've seen stranger things, but if we look at the largest bars for the bull market, you've got to move about $500 billion there. So you would need multiple $500 billion weeks in a row to get you to that 100% level. That's why I'm saying it could take a few more than just this week and next week. It might be a bit of a pause, and then we start to work our way higher into that 4 trillion. But at this rate, especially breaking through this 50% extension, if we can get through this 3.8 trillion, I think it's almost baked in. Now let's take a look at something else that is baked in. The losses here, that was a shitty segue, but let's go with it. Sui Dex Cetus hit by a suspected hack, over 200 million in potential losses. So they've been drained now of 200 million. Sui USD has had another rejection there at $4.20 and then pulled back. So it's not in the worst position considering this sort of bad news for the market. But again, you still want to be cautious here as it's still underneath the 50% and closing below yesterday's move, which looked relatively manipulated. It looks absolutely crazy. If anyone has news on why that happened, let us know. That was 2 days ago. We had that bit of manipulation that I talked about with you guys on the channel. And then yesterday we just had the hack there that pushed the price up and now has dumped here on Sui. But it's still holding up relatively well. Sui BTC still holding above that 50%, but the BTC chart has closed lower again on increased volume. XRP is just finding a little bit of a base here against Bitcoin. So that's what you want to see, especially if this is going to start outperforming again. XRP USD still holding at the 240 level, climbing slowly here. So closed above 251 are going to be a nice strong position again, back above the 50%. And for ETH, that's had a nice little pop off yesterday, going up about 4.5%. Needs to go above 2,750, still attempting to get past the 50% level here and those previous tops. So keep the 50% levels on your charts. I think they're still very much holding the market at this stage while Bitcoin continues higher. And the last one to have a look at is Sol, also climbing and attempting to get back towards that 195. So that was the major 50% level. So once these markets can get past their 50% levels, I think you'd start to see things go a little bit easier for the altcoin space overall. But until then, just keep watching Bitcoin, keep riding that trend. You can see some of the reasons why we would be at a key level right now. You got heaps of these resistance levels coming up for Bitcoin, the 50% for the altcoins, the USDT dominance still within a rock and a hard place. You've got the yields dropping off, the bonds increasing. You've got the S&P 500, the stock market's also grinding out here. So there's that little bit of uncertainty just creeping in. Bitcoin looking like one of the best ones here, not one that I would be wanting to short at all with this uptrend going on. Don't get liquidated at this rate. Thanks once again, guys. I'll see you at the next video. Take care. Peace out.